Hey guys, welcome back to another monthly roundup. This time we're going to be looking over January 2025, and it won't come as a surprise to anybody watching this that we're mainly going to be talking about the Trump administration and the volatility his administration has injected into the markets. So we're going to start with some of the pre-inauguration stuff happened at the beginning of the month. So we'll be looking at some of the press leaks, some of the tariff talk that occurred earlier in the month, and then we'll lead up to the inauguration itself. We'll discuss what's happened since the inauguration, so some of the tariff talk, and the effect it's had on the markets. We'll also have a quick look at the pound as well, and some of the volatility that we're seeing in the pound, the US, the pound to the dollar, the cable. We'll try to get some idea of where we're going next, which is always a difficult thing to do with Trump, but bear with me. Let's see if we get there. So to start off with, I want to throw back to the end of last year in my my roundup of 2024. I wrote that Trump has already shown that he'll impulsively threaten other nation states with punitive tariffs via social media. And currency markets are very susceptible to any kind of forward-looking guidance. And this includes Trump's social media tirades and any kind of tirade that he has. And I said that 2025, and especially the beginning of 2025, is going to be characterized by sharp spikes in volatility. And that risk management is going to be the priority for traders in early 2025. And I think based on what we've seen, that has certainly been borne out, and that is the case. I also said that by summer we would hope to see some kind of pattern from Trump's behavior, and that maybe we will have a better understanding of what tariffs are falling where and what and the market's response. But until that point, we're going to hold on to our hats. So let's start with January. So it was obviously quite a start to the year, as it usually is, until people come back from the holiday break. And then January 7th is really when we started seeing things change. We saw the JOLTS job data come in and ISM data come in as well in the United States. It came in very hot, came in higher than expected, and we saw the DXY begin to spike. We're going to be looking at the DXY, the US dollar index, for a lot of this conversation today, just because it's a really good bellwether for how markets have responded to the various actions. So the DXY spiked January the 7th. And then on January the 8th, the CNN released a report that, again, one of these press leaks that I think we'll have to get used to again. If anybody remembers Trump the first time around, this is a very common factor in the Trump administration. Lots of leaks to the press, lots of rumors. So there was some leak to the press that Trump was considering using the International Economic Emergency Powers Act, the EPA, which we have heard about again in recent days with Colombia, but this is the first time it was brought up. And what this does is it allows the President of the United States to manage imports, manage import duties in an emergency power. And that Trump was considering using this to circumvent Congress to apply tariffs on whichever country he chose. And the DXY spiked even further throughout January the 8th. And a word here about the UK, as I said at the top. So around this time, so the DXY was spiking further as the dollar was gaining against pretty much every other major currency pair. And that includes the British pound. The British pound, though, is hit with a 1-2 punch. So the new Labour government is finding a very hard time of it. They're convincing the investors that they're not going to raise taxes further. The UK economy is in pretty dire straits. So not only was the pound put under pressure by the talk of Trump enacting these emergency powers for tariffs, as all currencies were, but also we had simultaneously investor flight, and we saw bond yields rise very high in the UK. Not quite as bad as when Liz Truss made her very ill-fated budget statement, but close, very close. And simultaneously, the pound fell, I think, to its lowest level in 14 months, down to 1.21. So, and that's something, I mean, things have improved somewhat in the UK since then. Bond yields have fallen back, but it remains a threat. I mean, and it remains an issue in the UK until there is some more investor confidence that the UK government is not going to raise taxes too high, and that the UK economy can somehow dig itself out of this hole. There's going to be trouble there still. So keep an eye on that. Other than that, so all the major currency pairs fell against the dollar and the news of this Emergency Powers Act. And then to top it all off, on 10th of January, the NFP came through, the non-farm payroll in the United States. And it was a bumper. It was another big one. It came in at 256,000 versus 160,000 expected. And this sent the DXY soaring even further. It spiked over 110, almost unprecedented. And the US dollar strength was unsurpassed. I mean, obviously at this point, markets fell as well. Stock markets fell as it became clear that any hope of Federal Reserve rate cut was fading fast in the wake of both the twin threat of Trump's tariffs and with the US economy still running hot, very hot. Then the next week, we see things slow down a little bit. And January 15th, we saw core CPI, the inflation data come out in the US, and it actually came in below expectations. And that was a cool balm for the market. So it was a real sigh of relief. Stocks rose, the DXY fell back, US dollar lost some ground, and that's where we remained until Inauguration Day. And we had the strange circumstance of Inauguration Day also being a public holiday in the United States. It was Martin Luther King Jr. Day. So US dollar index is not being tracked, US markets were closed, and obviously Trump was inaugurated as president of the United States again. Interestingly, Trump came in, and as he had threatened, he fired off a barrage of executive orders. These are clamping down on everything from immigration to green energy funding, regulation, government diversity initiatives, all kinds of things. I mean, he pardoned the January the 6th rioters, in a very controversial move. In a very controversial move, another one, he pardoned the founder of Silk Road, Ross Ulbricht. You may remember Silk Road was a dark web drug marketplace, and that he had gone down for pretty much life, I think. And Trump, I think, to please his libertarian base, pardoned him as well. He was, you may remember Jimmy Carter, former president of the United States, had died recently. And so flags were flying at half-mast at the Capitol. Trump was reportedly annoyed. And so he signed an executive order that on inauguration days in the future, all flags will have to fly at full mast. So he fired off this huge flurry of executive orders about all kinds of things, except for tariffs. And there was no mention. He briefly mentioned it in his speech, but apart from that, there was no word. And the dollar fell, unsurprisingly, as everybody was waiting for some executive order slapping tariffs on China, as he had threatened. And it never happened until that evening when he sat down for his first press conference in the Oval Office. And then quite late when the markets were open, he started discussing putting tariffs on Mexico and Canada. He also discussed tariffs on China. And then, of course, the dollar responded immediately. And it's finally the expectations for some kind of tariff talk had been met. So since then, Trump has threatened Canada and Mexico with a 25% tariff on all goods, starting on February the 1st. This is in retaliation for weak border security and assisting in fentanyl trafficking. He's threatened China twice, I think, once with a 100% tariff unless they sold half of TikTok, unless half of TikTok was sold to a US company. And secondly, with a 10% tariff on all goods, unless as punishment for their involvement, what he sees as their involvement in fentanyl trafficking. He accuses China, and he may be right, of not clamping down on exports of the chemicals needed for fentanyl production to Mexico, where a lot of fentanyl is produced. He's also made vague tariff threats against the EU. He, quote, "They don't take our cars, They don't take our farm products. They don't take almost anything. And yet we take their cars and we take their farm products. We take a lot from them. So we'll figure that out with tariffs, or they will have to buy our oil. And then over the weekend, on Sunday, the Trump administration started deporting illegal immigrants and shipping them out in military planes. And you may remember that Colombia refused to take the deportees, and Trump turned around and, using the EPA again, as we talked about, this Emergency Powers Act, he he got it ready to sign into law 25% tariff on all Colombian goods and visa restrictions on anybody involved in the Colombian government. So quite a wide range of tariff threats. But so far, he has yet to place any tariffs on anyone. And so we've seen the dollar come down actually quite a bit over the past week, because none of these threats we haven't seen the reality, and they've all been relatively vague and contradictory, and we haven't seen much in any terms of real action. And that is until today. And overnight, another press leak. This time that Scott Bessent, the new Treasury Secretary, who's seen as a moderate in the Trump administration, has put forward a plan for an universal, incremental 2.5% tariff on all goods coming into the United States. What this means is that all goods from all imports into the United States would be hit with a 2.5% tariff, and this would increase every month by another 2.5%, up to a mooted 20% on certain trading partners. This sounds a lot more realistic. This sounds a lot more likely to happen than a lot of Trump's threats so far. And markets have responded. We've seen the dollar go back up as a result, and I think we'll learn more in the coming days. But I think this is probably more like what we're going to be looking at in the future. We were talking earlier this week to the senior market analyst at XM, Achilles Chocholopoulos, and he was saying that it's almost certain that Trump is going to place tariffs on someone, but as of yet, we're not sure. We're not sure where they're going to go. And it's interesting, in this week, we should be talking about the Federal Reserve meeting. But frankly, I mean, that's set in stone. They're going to keep rates on hold. And that, frankly, it kind of pales in comparison to all this discussion of tariffs on the effect on the markets. So huge volatility, and that's going to continue. We're going to see this, as I said, we're going to see this volatility. It's going to continue through the next few months, at the very least, into 2025, across all markets. And finally, I want to end on the note of equities, which is we've seen that this Chinese startup, DeepSeek, it's an AI company. There's news out yesterday, that they have released their first large language model, and that they have produced it with less than 5% of that necessary to build a large language model at OpenAI. And they've also released it open source, which has undercut one of the biggest financial crazes we've seen in the last 10 years, which is AI investment. NVIDIA has collapsed. I think they lost about $600 billion in market value. And there's a lot of soul searching in the United States going on right now. Whether there's enough to lead to a market correction, I think that's unlikely. I think any kind of market correction will take more than this in the future. But it is definitely something to keep an eye on, and it's something that I think if you're an equities trader, you should worry about the US market. There's the concentration of capital in the US market at the moment, and the value of US equities is due for a correction at some point. When that happens, nobody knows. But until it does, it's going to be vulnerable to these kind of events. So there's a roundup. Like I said, it was going to be Trump heavy. It's going to be very Trump heavy, but made it through. And I'll see you next month for a look back at February. Thanks so much.